Hey everyone, welcome back to Upside Down Data. Today I want to talk about ETH, this rally that has been going on and how much further it's likely to be able to continue. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there. So if you've been following the crypto markets, you've been following ETH, one of the things you probably heard about with ETH is that the merge, kind of the merge that we've been waiting for a long time, or at least that's been talked about with ETH for a very long time, is supposedly very close as soon as next month. And that's really what, a lot of people look at as catalyzing this big move up that ETH had. ETH has really been leading the way much more than Bitcoin has in this kind of relief rally we've been seeing in the crypto space. And it really seems like that narrative is one of the big things that's driving this. So what I want to talk about is, with this rally that we've seen, which is, from the very low to the very top, was up as even over 100%. We're currently up about 89% off of the lows. Has this move largely played out, or does ETH still have more gas left in the tank? And so to have this conversation, I want to consult some of our models we have here on the channel, what they're seeing as they look at ETH's price action, and what we might be able to glean from that in terms of where it might go next. So I'm showing you here the upside downside potential indicator, or UDPI. This is the long-term version of the UDPI that cares about moves that play out over months to longer, so much more of a macro in its focus. And so this is the price action of ETH color-coded to the UDPI level. So 5 is high risk, -5 is low risk, and you can see it does a generally good job of quantifying, risk in ETH. Kind of flashing red towards these topping points, and then green down towards these bottoming points. And we can see this a bit more clearly if we just look at the raw output of the model across time, and then the yellow line in the background here is the ETH price. And so, yeah, as you can see, it generally spikes up at around these tops, or kind of local top points, and then gets quite low during the bottom of these bear market moments. Interestingly, back here in June, it went all the way back down below -4. And now we've been rising back out of that. We've been rallying back up. Risk has been rising as a result, although it's still quite low. So we're thinking about this in the long-term perspective, the more macro perspective. For asking the question, could this rally have more gas in the tank? The the answer is, well, certainly yes, right? From everything this model has seen, it's basically was thinking that ETH was very oversold down at these levels, similar to March 2020 crash or the bottom of the 2018 bear market for ETH. And therefore, some significant longer-term upside potential is quite reasonable from those levels, if ETH's historical price action has any bearing on the future. And so this rally here was not really surprising from that perspective. But if we're asking more kind of short term, this specific rally, because again, these rallies don't go up, generally speaking, don't go up monolithically. They don't go up just up only. There tends to be kind of these rallies and pullbacks, etc. So then the question is this rally due for a pullback at the very least? We can look at some other versions of the UDPI to get a better sense of that. So what I'm going to show you here is the medium-term UDPI here on the left, which cares about moves that play out over weeks to months, so a little bit shorter in its time focus. And the short-term UDPI that cares about moves that play out over days to weeks, so even shorter in its time horizon. And what you can see is that for both of them, they are getting more and more doubtful of this rally than the long-term, and with the short-term being the most doubtful. So if we start with the medium-term here, see that we're up above 1 now on the medium UDPI, coming up from a level of below -3 back in June. So we've really shot up through the risk levels here in this rally that we've seen, up above 1. You'll note actually that around this level is where we topped out in this kind of relief rally we saw back earlier on in the spring of this year. It'll be interesting to see if that acts as resistance again here on the medium-term UDPI. And a very similar story is taking place with the short-term. Here it's even more bearish in the short-term. We got up almost to 3, about 2.6 or so. And now we're starting to kind of consolidate up at this level up here with risk. But again, coming off of a score below -3, so really shooting up through the risk levels. And so from both of these perspectives, finding a local top at the very least here for ETH is very reasonable from my estimation. Just when I look at this, personally, I would expect, I would place greater odds at a pullback versus not for ETH. Now, again, not financial advice. You make your own opinion, read these data as you see best fit. Certainly, obviously, there is more room to the upside on both of these. There is still room up here. But we're just getting at a point, especially in the very bearish kind of conditions we've been in for so long, I'd be shocked personally if we just go off and rip to all-time highs from here with ETH, even with something like the merge happening. Because again, the merge very well could end up being one of those sell the news type of event where we might get a lot of hype leading up into it, but then a lot of people sell, their ETH to kind of exit their position once the actual news happens. That happens a lot. Look back, back in September of last year at ADA Cardano, it rallied like crazy going into its launch of smart contract, and then pretty much has been down only ever since. It was very much a sell the news type of event. So I think it's totally feasible that could happen again with Ethereum when the merge actually happens. So finding a top at around these levels would not be surprising, both from a narrative perspective, but then also just from a risk perspective based on what these models are seeing. So again, not financial advice, but that's my base case for Ethereum. That I don't think it's just the merge is going to send it ripping immediately to all-time highs. I think it could certainly have longer-term bullish implications. Reduce issuance, basically making a tighter supply of ETH that could then create supply shocks that could lead the price up higher. But I would be shocked if that just does that immediately and we just go to all-time highs immediately. I think, personally, my expectation is that there are going to be some pullbacks along the way, and this being a local top is very reasonable. So let's flip over to a different model that gives a slightly different perspective here. So that was kind of a risk-based view looking at the UDPI. This is more of a trend-based view looking at the market direction classifier, or MDC. So if you're not familiar, this model looks at trends in an asset. It basically evaluates the asset's price action and creates a critical level that it's watching, that the asset, if it's above that level, it's bullish, and that can lead to these big parabolic moves. And if it's below the critical level, that's bearish. That can be leading to these big drawdowns that we've seen in ETH's price in the past. And so really I like looking at this model because it's a way of just getting a very easy answer of, what level should I be watching right now for the asset. If it's above that level, then from this model's perspective, maintaining a bullish bias is reasonable. If it's just below that level, then a bearish bias becomes more reasonable. So right now, watching a level of about 1,300. So we're currently trading at about 1,600. So well above the critical level. But, this is a dynamic level. It'll be changing. You'll see it's actually been rising kind of through this rally. It's been coming up. So this will probably continue rising as well. That's the other thing that's really nice about this model, right? If you had, not saying that this is what one should have done, but, if one had bought the second that ETH flipped above the critical level here, then no matter what, you're going to be locking in a profit. Because even if price crashed down below this level immediately right now, you still be locking up a decent amount of profit right here. And so I like this model because it's a good way of kind of managing risk, that you can identify when a bullish versus bearish bias might be reasonable, and you can adjust your risk accordingly. Again, not financial advice, but that's just one of the things that I like with this model, one of the benefits I derive from looking at it. So the last model I want to look at here is the momentum bias indicator. And this one can give us some information about the short-term price action, but I also like this model because it gives us a lot of information about longer-term expectations as well, just based on how the asset is behaving. So this model quantifies momentum in an asset, and specifically, is the momentum biased to the upside or biased to the downside? So if you're in the positives, then it's biased to the upside. Negatives, the red here, is biased to the negatives. And we can see is that in this bear market, it has been very much biased to the negative. And in fact, we actually registered our lowest ever, MBI score back in this capitulation going down into June. Probably in no small part, given the fact that there's all this forced selling of ETH that happened throughout here, as the Three Arrows Capital collapsed and the Celsius debacle and everything else that happened during this time. There's a ton of forced selling of ETH, and that really showed up here. There's a ton of negative momentum. You can see how much ETH just dropped off a cliff, pretty much straight down through here, and you can see the MBI reacting to that. So now we have rebounded quite significantly, right? Here, and we've actually popped back above zero, meaning that ETH has now regained kind of an overall positive momentum outlook, momentum bias. But that's not necessarily meaning that we're out of the woods by any stretch of the imagination, because what you see in previous bear markets tends to be this kind of behavior where you'll poke your head up above zero and then go right back down to the red. We did that here. We poked our head up above zero, went right back down to the red. And so for us to get a more macro bullish disposition on ETH, we'd like to see this not just be the same kind of rejection, right? Where we just poke our head up to about this level where we are right now and just go right back down to the downside. That happens, that would mean the bear market, in my estimation, the bear market's still very much still on. What I'd like to see is something more like this start to play out, where even if we have to dip back down, we come up and we start oscillating around zero. Because that can mean that a trend reversal, a bigger, broader kind of momentum reversal is in the offing, and that can lead to these kind of bull market moves. And especially when you start seeing a lot more time spent up in the green than in the red, that can be kind of the precursor to these big parabolic moves to the upside. What I'm personally going to be watching is, can we maintain a positive momentum bias here? And if we're able to do that, or start kind of equally oscillating around zero, which tends to be a transitionary kind of behavior on the NBI, that would be a bullish sign, and that might mean that we're gearing up for a more of a broader bull run. If we just get rejected back down here, then we might have to go back into bear market territory, either chop around these levels or even take out the lows back from June. So too early to know yet if that's going to happen, but something to watch, absolutely. And if we see this kind of thing happen, we start closing in the red again, that's where I'm going to be, more short-term concerned. Certainly thinking whatever rally we were just in is probably played itself out and needs to consolidate a bit more for another push to the upside. So that's my overall assessment of ETH, is that personally, short-term, I'm cautious. I'm not seeing this rally ripping to all-time highs as my base case. Could be wrong, it's crypto, anything can happen, but that's my base case. I think generally the data are kind of painting that picture that in the shorter term it's overextended, but in the longer term there's plenty of upside to be seen. And so what'll be interesting to see on something like the MDC, for example, is even if we have to correct, maybe back down to a level closer to 1300, can at least stay above the MDC. And if we do that, that could be quite bullish. Because again, we've seen that before with rallies that come down and kind of test the critical level and then shoot it back up, come up, test it, go back up. Just because we're dipping down to it doesn't mean we have to go collapsing down. Occasionally it can just blip down and then right back up. So what I'd really like to see for a broader bullish outlook is that we are able to kind of generally stay above this level, or if we fall below it, we are able to very quickly reclaim it. But if we kind of decisively fall below it, I'd be starting getting really concerned and seeing kind of new lows being a possibility. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. But a lot of updates, better indicators, and more over there.